Hi, we're Team E, and we're going to talk about Mary today. Mary Quinn is a pharmacy student on her APPE rotation. She works at a TPN infusion clinic that specializes in home TPN services. Mary Quinn has been advised that during her APPE rotation, she will need to assist Dr. Smith with the master budget or profit plan. She will need to review her pharmacy management course material to tackle this challenge.
The master budget is the overall complete budget that is compiled from several other individual budgets to provide a detailed profit plan from all aspects of the pharmacy operations. The master budget is divided into three broad categories: sales budget, operational budgets, and budgeted financial statements. These three categories are divided further into 13 individual budgets that assess sales, production, labor costs, material costs, marketing, overhead costs, balance sheets, estimated incomes, and cash disbursements. The pharmacy manager is responsible for setting up the master budget using each of the other individual budgets. Oftentimes, computer software is used so that we can manipulate numbers in order to see trends and changes. When first starting a budget, values are assumed and predicted based on what the ideal running budget should be. Then after the first year, a more accurate budget can be organized by changing the values and using those values for future use. The purpose of the master budget is to clarify the plan of action, simplify communication and organization, distribute resources, control the operations and profit, and evaluate the performance of the pharmacy. It is important that the budgets have a specific time period and final costs in order to compare them from year to year. This allows the pharmacy manager to compare the performance of individuals, a specific department, or the entire overall pharmacy. It allows the pharmacy manager to make informed decisions on planning and controlling the pharmacy to make sure that it both provides profit and it operates smoothly.
Sales of services or goods fuels the production budget for the services or goods to start the process. The first step in the sales revenue budget, which is determined from sale forecast for goods. This estimation strategy varies in different pharmacy settings. In community pharmacy, the forecast is established by analyzing the history of past prescriptions and weighing out the alteration in any trends of medication choices. In hospital settings, the pharmacy should monitor the number of occupied patient beds and also put into account levels of patients' acuity. In case of online and mail order pharmacies, the forecast is based on the number of patients visiting the website and the number of orders. In general, forecasting the sales are done by manufacturing and merchandising pharmacies. Furthermore, pharmacy managers should always be up to date about all the changes in the government in terms of laws and insurances, since this may alter the drug distribution. For example, if Medicare changes its medication coverage, then the distribution will be affected. The sales forecasting system is mainly based on previous year's results in the sales, and additionally, the team should look up and consider several factors and from many sources. Some of the factors are the following: past sales levels and trends, the general economic trends, the economic trends in the pharmaceuticals industry, in situational factors such as increase in demands for cold medication in winter may increase sales, political and legal events, pricing policy in the pharmacy, advertisement and promotional activities, competitor actions, goods or services contemplated by pharmacies, and finally market research studies. Moreover, using statistical techniques like regression analysis and probability distribution for sales in large and multi-unit companies helps the pharmacy management team to draw a well-founded conclusion on sales forecasting.
A pharmacy needs to develop a sales budget based on a set of operational budgets that will be carried out to meet the demands for goods and services. The first part of an operational budget is the ending inventory budget for direct material. Based on the product, what this consists of is the budget for direct material, direct labor, and overhead required for the production process. This ties in with the direct material budget, which shows the number of units produced and the cost of materials to be used and produced during the budget period. The direct material budget leads to our cash budgets, which is a collection of cash receipts expected from the selling of goods or services, and planned cash disbursements to pay the bills of the pharmacy. Cash budgets are necessary in order to anticipate any changes in cash flow during a period of time of budget period.
Direct labor is the cost of paying all of the employees directly involved in the manufacture of its goods. For home TPN care, this would include the salaries for all the pharmacists and technicians responsible for preparing any TPN products that will be sold. Other components of an operational budget include administrative costs and overhead costs. Administrative costs are those paid to employees who are not directly involved in the manufacturing process but are still essential to the operation of the business. Management and accountants are among those included, and for Mary, her own salary would most likely be included in this area of the budget, depending on the structure of the company. Overhead costs are all of the costs of manufacturing products that are not directly related to labor and raw materials. Examples include taxes, utility bills, rent, depreciation of the building and equipment, delivery costs, insurance, and any marketing or advertising costs.
A budgeted financial statement shows the overall financial results of the pharmacy organization's planned operations for the budget period. There are three components to a budgeted financial statement: the budgeted income statement, the budgeted balance sheet, and the budgeted statement of cash flows. The budgeted income statement shows the expected revenue and expenses for a set of planned operations for each budget period. The budgeted balance sheet shows the expected balance for a company at the end of each period, including assets, liabilities, and owner's equity, as long as all planned operations are carried out. The budgeted statement of cash flows shows information regarding expected sources of cash and uses of cash for investing activities, financial activities, and operating activities during a certain period of time.
One way that Mary can begin to prepare her master budget is by using activity-based budgeting, or ABB. As we can see from this diagram, when using ABB, the first step is to determine what products or services the business will produce and who will be purchasing them. Once we know what the business will be producing, the next step is to define what activities will need to be performed to manufacture the goods and implement the services. From there, costs to complete each activity are assigned and a master budget can be constructed. Because Mary is not creating a budget for a brand new business, ABB would be a good choice because she can use previous year's sales data for home TPN care to predict sales for the next year, as well as gaining insight from other managers and administrators to determine what activities would be needed to produce the products sold and then allocate resources accordingly.
Now we can talk about padding the budget. There are 3 reasons to pad a budget. People often perceive that the performance will look better in their superior's eyes if they can beat the budget. Second, extra money is often used to cope with uncertainty. If some negative event does occur, the pharmacy manager can use the budgetary slack to absorb the impact of the event and still meet the cost budget. The third reason why budgets are padded is that cost projections are often cut by others in management. Mary will be working off assumed numbers since this is her first budget. She will base her budget off of her knowledge of any economic trends in the pharmaceutical industry. The home TPN clinic is up and running and should have a cash budget, which should be updated this year since Mary's here. She must control the sources of income and the costs of operation in her budget. While padding the budget may be tempting, an accurate budget will ensure the company thrives.